All right, everybody. Yesterday was the tax filing deadline, unless you file an extension. Um, some of the agents called and asked a lot of questions. You need to start preparing now for 2023 when you're going to do taxes then. So start tracking your mileage, meals. You still can deduct meals if you take a client out and you talk business. Home office deduction, make sure you do the home office deduction. Health insurance, all your supplies, phones, internet, computer, all this of the equipment that you're going to be using, they're part of the trade, you can deduct all of those. Now, one thing that you have to start doing, and it's really important, is once you start generating a nice income, you need to start looking at moving from being just strictly self-employed, a sole proprietor, into forming an LLC. An LLC is not a corporation, it's a limited liability company. What that does is protects you from lawsuits, and it also protects your stream of income from being sued if you do get sued from outside. And that's generally somewhere around 80,000 in income that you're making. You want to try to deduct as much of that 80,000. If you're a 1099 contractor, and most of us are with the different insurance companies, $80,000 of income can probably be reduced to about 40,000. So you probably don't need to form a corporation at that time, but you do need to form probably an LLC. Everybody's different and depends on your assets. So we can look at that for you. But once you start getting near the $100,000 range in total 1099s added up for the year, you probably need to form an S Corp. An S Corp will save you on taxes. An LLC will not save you on taxes. An S Corp will, but only if you're making around 100,000, because you want to write off as much as you can, and then if you write off half of it, you'll have about $50,000 in taxable income, which can be pretty expensive. FICA is about 15.2% of taxes. So you want to make sure that that you try to reduce that as much as you can, and an S Corp can do that for you. There's ways to work it. You have to know what you're doing, but having an S Corp requires a lot more paperwork. So you don't want to do it until you get to about that $100,000 range in 1099 incomes. Now, other alternatives, other strategies you can utilize. You want to try to get an HSA account. HSA for 2022, you can contribute $3,650 for yourself, pre-tax income. That means it doesn't get taxed. And if you have a family, up to $7,300. IRAs, you can contribute $6,000 for yourself. You can also have a spousal IRA at $6,000. So that's a total of $12,000. That's done pre-tax. And then the big one, if you're self-employed and you don't have any employees, you can set up what's called a solo self-directed 401k. Solo self-directed 401ks, $61,000. You can reduce your income by $61,000. And if you're married, your spouse can also contribute up to $61,000 in there. So it's a total of $122,000 for the year that can be reduced off your taxable income. It's huge. So again, there are certain parameters, there's certain rules that you have to follow, but that's a lot of money you can be able to save. So if you have any questions, give us a call. These are the tax tips for 2022. Thank you.